It's Friday, May 1st. It's a new dawn. It's a new day. It's a new life. You know what? I'm feeling good.
And I'm feeling good. I'm feeling good.
Hey guys, it's your favorite mortgage guy, Steve. You know what? May 1st. May 1st. Can you believe it's here already? Beautiful sun, blue skies. Here's the best part. It's supposed to have a 95% chance of rain tomorrow, but I don't care. May is here and it's a new dawn. It's a new day. It's a new life. I'm feeling good and a lot of good things are happening. But here's the best part. Not a lot of news this week. So listen, here's what I'm going to do. I'm going to go into your questions, and a lot of your questions are the same ones that we've heard before, but there's a couple of different ones here. So the last couple of weeks I've been talking about predatory lenders. Let me adjust my microphone here. About predatory lenders. Now, what I mean by predatory lenders is this. You know, you get the text, you get the emails, you get the phone calls coming in with these lenders saying, oh, we can get you this rate, right? And you go, whoa, nobody else has told me that rate was out there. I might just have to jump on this. And then all of a sudden you say, let's go. And then the person comes back with all the documentation. And now you find out that they're charging discount points, 4 and 5 and 6 discount points to get this super low rate. And why would you do that? That's why I'm here to talk to you about it. So when I talk about predatory lenders, that's what I mean. These are people, they're opportunists. They go to the courthouse, they buy leads, and they just start dialing for dollars. Okay. Aging population, again, I'm just going to refer to call me directly. There's a lot on that. I'll say this again in case there's some new people listening, which there are every week. There's loans out there for people who are aging, like your parents who are on a fixed income, who might have a house that's paid for, and they need to do some repairs, or maybe they need a new car and they just can't afford it. And maybe the families just can't afford to support them, right? After all, these are your parents and they did raise you. Well, there's a loan called a reverse mortgage out there. There's never a payment. Nobody loses the house, but they get to take advantage of equity. So call me on that one. How do I tap into my equity without refinancing? I'm going to tell you this quick story of a client that called me this week because I've been beating that subject up for the past year about we don't care if you got a 2, a 3, a 4, or even a 5% interest rate. But what we do know is if you look at all the statistics, all of them that are put out by the credit bureaus, by Fannie Mae, there are so many people that are terribly in debt right now, credit card debt, or they went out and bought a new car and the payment's $1,100 or what have you. But there's a way out. And this guy told me when he called me this week, he's like, Steve, I've been watching your videos. And yeah, you know what? I have a 2.5% mortgage, but I have $250,000 in equity. I've got $67,000 in debt. It's costing me $1,850 a month. I'm going to have to swallow my pride and take your advice. Well, we saved him more than $1,800 a month. More than that. That's real cash flow back into his pocket. Yeah, he took a higher mortgage rate, the higher interest deduction, but he doesn't have any more debt. And he swallowed his pride. New dawn, new day, new life. He's feeling good. So listen, guys, what do you want to do? Do you want to have 2 mortgage payments so you've got an equity line payment and a mortgage payment? Do you want to just take your pride and go, I got a 2% mortgage. I'm going to beat myself like Tarzan. And nobody cares except for you. I mean, your neighbors don't care. But, you know, all I'm saying is call me and let's talk about it. Okay. Should I use AI? I absolutely love that question. And here's what I'm going to say about that. I wish I had one of those the sound devices that could make me laugh like an old, 1960s scary, ghoulish laugh. Because here's the thing. You think AI is giving you your money? You think AI is underwriting your loan? Do you think AI is looking at your documents? It's like going to the internet. They're not doing it either. So yes, you can use AI to help you with qualification, but it's like going to the doctor with a piece of paper in your hand that says, Google said this. Are you going to rely on Google? Or are you going to rely on the guy with the medical degree? Are you going to rely on AI? Or are you going to rely on your favorite mortgage guy, Steve, who's got the information and who can get you the information? Yes, you can use AI, but just for the basic guidelines, the top of the tier guidelines. That's it. Okay. Loans for self-employed individuals. Okay. Well, I got about 30 requests this week for more information on that. Here's what I'll tell you. Okay. Guys, a lot of people are self-employed. A lot of people that lost their jobs started businesses, right? So you have to have a 2-year history of being self-employed in order to get a mortgage. There's no question about that. But nobody wants to pay taxes. So what do? They file their tax returns, and the tax returns show no income, because who wants to pay taxes, right? I get it. We get it. The industry gets it. So there's what they call these non-QM, that's qualified mortgage loans out there. Okay, bank statement, pay, no income, no documentation. All those loans that you heard about in the past that caused the housing market to go into collapse. Well, now they're regulated, and so now they're back. But because of the regulation, they're scrutinized. So here's what I would tell you: if you're self-employed and you want to get a house, which you should want to, you know what? Who cares what the rate is? You're not going to get today's rate on one of those loans. It's going to be about 1% higher, could be 1.5% higher, but really, at the end of the day, who cares? You're taking advantage of equity and you're getting a tax deduction because you're paying the interest. So if you need a self-employed loan, just call me. We can work out the details. Heads up. Do not go to AI on that, because let me tell you, there's not enough information out there for AI to do the research. More importantly, credit score. Don't come to me if you've got marginal credit, like below 620. You're not going to get a non-QM loan. Most of them require a 640 to 680 credit score, because listen, let's face it, we're just looking at your bank statement to determine how much you make. So they're going to expect a different credit requirement. Okay, so not much in the way of news this week. Looks like Kevin Warsh is heading to be confirmed as the next Fed chair. Now, that's great news on our part, because I swear to God, it seems like every time we feel like rates are just on the bubble of getting better, boom, we get smacked in the face, they go up. Same thing happened yesterday. We thought that they were going to get better, and boom, we got smacked in the face again. And they didn't get worse, but the bond market didn't cooperate. So Kevin Warsh is pro rate reduction, but he still has to convince the Fed. So here's the status. It looks like he's been cleared through the Senate Banking Committee, which is a key step, okay? His nomination has been advanced to the full Senate for the final confirmation vote, which, it's expected soon. We don't know when it's going to happen. Now, most of the reports out there say it's likely, but this has not happened yet. Now, what I will tell you is, you get into the politics of it all, and you watch the news, and you see that there's something about the old Fed chair, Jerome Powell, and some investigation. Well, there's some horse trading back behind the scenes. That investigation was dropped, and I think a lot of it had to do with, we'll drop this if you just walk away into the sunset. So what does this mean in plain English for Kevin Warsh? He's essentially one vote away. The markets are already treating him like he's the incoming Fed chair, but legally he's not there yet. Now, timing matters, because Jerome Powell's terms end around May 2026, mid-May, so about the middle of this month. So this is happening pretty fast. Now, why you're hearing his name a lot? He is the official nominee of President Trump. He's expected to replace Jerome Powell pending the final vote. There's already an internal federal tension, there's internal Fed tension and market speculation about his policy direction, especially around rates. Now, the key with that is, you know what? There's a bunch of board of governors, and not all of them see eye to eye. But we do need to see some relief right now. A lot of it's inflationary. A lot of it has to do with Iran, the Strait of Hormuz. It looks like the dust is starting to settle there. If you're watching the stock market and you're looking at your 401k, you're patting yourself on the back, because it's kicking butt right now. But of course, when those things kick butt, it takes it from bonds. So here's what I'm going to tell you. Today's May 1st, right? Did you know the recent statistics show that if you had bought a house in January, you'd have about $21,000 in equity? It's growing. That's why I'm telling you, stop waiting. What are you waiting for? Call me, your favorite mortgage guy. All my contact information surrounds this video here. Call me, text me, Guys, it's been a slow year. I could really use your referrals. So if you need me, call me, text me, whatever you need. Your favorite mortgage guy, Steve, I'm here to help you. Hope you guys have a great day, great weekend.
It's a new
Happy May 1st.
life for me, and I'm feeling good.